Okay, very good morning, Friday the 28th of April. Despite the democratic process of Ellen being elected to deliver the briefing this morning, I will try and get her involved at some point. She's shying away at the moment. But looking at the charts this morning and what we're looking out for today, and I guess starting off chronologically, we need to look back to the performance of the euro yesterday and what we had from the ECB press conference. So we'll have a quick recap of that. And really it came down to two real kind of fundamental factors in how the market really reacted. First of all, where we are at the moment. Obviously, one of the interesting things just technically is we've managed to maintain the gap higher that we've had post the Macron and Le Pen situation. So the fact that the newer candidate Emmanuel Macron went through alleviated near-term concerns, given the fact that most polls would be indicative of the fact that he is now going to win. There's been a couple of kind of political twists and turns this week between the two candidates now trying to cultivate support for each campaign. However, nothing's really factored into the market, so to speak, to a great degree. And for the time being, we still maintain a 109 handle. If we zoom in a little bit to the actual ECB press conference and the market movement that we saw. So let me actually zoom in on a 5-minute, be a bit easier to see. So first of all, we had the initial move in the euro currency. I'm going to focus on the currency because it kind of most logical with the way that the press conference unfolded. And as you can see, in terms of the structure, as we were talking in the preview yesterday about the timing in regard to the bigger weighted influence of his statement tends to come in the first couple of paragraphs. Likewise, in the Q&A, the more pertinent questions tend to be the first couple, and then the rest of the session. So once you get over the kind of first 20 minutes or so of the Q&A, it tends to become fairly dull, and the questions more relevant have already been asked and responded to. But we initially moved up in prices, and that came as there was one key comment. Obviously, something we were talking about yesterday was what was the ECB's perception about the economic environment, given the fact that underlying data continues to improve, growth across nations continues to also bounce. Spanish economic growth this morning exceeding expectations, and that's been a fairly familiar pattern. And then essentially they changed that wording. They said that the downside risks to global or to economic growth had diminished. And so that was a slightly more hawkish phrase and reflective of more optimism going forward, and the euro appreciated predominantly on the back of that comment. However, if you think about what's the central bank's mandate, or the main mandate, it's not so much about what they think of the economic environment. It's more to do with how do they foresee inflation playing out going forward. And essentially, they basically said that inflation, certainly from a core perspective, continues to remain subdued. And at this point, they're still yet to see the consistency in the data, and inflation specifically, to make them feel warranted to be talking about any type of exit strategy at this point. That was the overriding dovish interpretation that saw not just the reversal of the initial downside risk diminishing comment, but we continued to move lower on the back of that comment at the time. Sub 109, and then since then we've kind of tracked relatively sideways around that figure to where we trade this morning. So all in all, I would say, looking at where we are now and where we have been on the week as a whole, the ECB press conference really was a fairly small blip on the radar. Ultimately, the ECB, as per the Wall Street consensus, no one's really expecting them to make any type of hint towards subtle language changes to then be talking about QE tapering and then eventual interest rate hikes in the deposit rate until at least June, when that language is going to come under scrutiny. So very much a holding pattern from the ECB. Obviously kind of cautious optimism. There's no need for them to get too upbeat on things at the moment, not when obviously the French presidential election is still to be concluded on the 7th of May, and inflation still needs to show some more solid signs of picking up. So all in all, I think that event's kind of been and gone now, and I think the market will quickly kind of look at that in the rearview mirror and focus on other things from here forward. One of the bigger moves that we had last night then, if you are not aware, and most pronounced, was the NASDAQ future. Just bringing that into shot here. The biggest move of the day coming after the Wall Street close. Obviously we talked about this in yesterday's briefing about monitoring your earnings calendar for US earnings season for any potential large cap names. I was about to mention a specific word that people often use as a forward indicator for certain earnings for certain sectors, but I've been warned not to use that word again. The guys on the floor will know what I'm talking about. But essentially two big market weighted caps stocks reported last night. That of course being Alphabet, or otherwise known as Google, and then you also had Amazon as well. Now Google parent Alphabet rallied 4.5% in after hours trading, while Amazon climbed 3.8%. Google though, when you look at the numbers, when you start looking at the report, I don't know if you have done this morning, it's absolutely mind-blowing how a company of that magnitude, revenues in excess of $20 billion in one quarter, continue to see very large percentage gains in various divisions of their business. Absolutely incredible how they're continuing to diversify in terms of the revenue streams that they have. And they've really shot higher last night, and that dragged then, given they're such a large company, the whole index future higher. It brought the other futures higher with it in sympathy, and so it didn't translate too much into a direct read across into Asia, but certainly from a kind of risk perspective, it helps keeps things on the front foot, knowing that this earnings season in general has been relatively robust in terms of corporate America, at least the signs that we've been seeing. On the flip side though, there were a few casualties from the NASDAQ last night, just so you're aware. Intel and Starbucks, which both trade on the NASDAQ, faced 3% declines, but represent, and importantly, a significantly smaller slither of market capitalization when comparative to the other two companies we just spoke about, Alphabet and Amazon. So again, that's why knowing the stock weightings is really key when you're trading these index futures. Okay, following it through then to this morning, we have had a couple of economic data points. You've had German retail sales this morning, which came out, you can see here, 0.1%. That does look awfully small over the last 12 months, but actually that was stronger than expected. Expected, I think, was a contraction of 0.3%, so it outperformed. All in all though, German retail sales is not exactly the most market-moving number, but again, in terms of a sentiment play, that in combination with some decent Spanish growth figures this morning will certainly help things. You've also had corporate earnings out of the UK, quite heavy today, especially on the banking side. RBS, these are the opening prices from about half an hour ago, but they're up a similar margin. RBS up 4%, UBS similar margin, Renault 2.6, Sanofi 1.5. Barclays being the kind of casualty, if you like, of the earnings from this morning, but generally speaking, I guess erring on a more positive side. Sticking with the UK theme, one thing that I am seeing this morning though is if I make my cable chart a little bigger on the upside, let me bring into shot the FTSE. I've got the FTSE CFD here because I know some of you do trade that, and what we're looking at was throughout this week you had that obviously really big move when we had the announcement on last Tuesday, the 18th, of the snap election. We were talking about and focused on this kind of consolidation period that we were in for an extended period of time, so roughly about a week in terms of trading sessions. And now what you're seeing this morning is we're just getting a test here on R1, and we've used the both early and late Asia's session highs. Yesterday's resistance level was a bit of a springboard to act as a technical support now, lining up with that previous post-snap election announcement high. So fairly decent directional play, I'd say, with a technical entry. If you're looking at that cable move, I still think that ultimately the broader picture here is that ultimately we're going to go to 130. I don't think any reason why not to get close to testing that level now that we've come this far, but I think 130 will be a fairly significant barrier, at least for the time being, should we get there today. Obviously R2 comes in about 18 pips in the future shy of that 130 level should we extend on that move. One thing that's interesting here though, and you're seeing it on the charts, if I just kind of zoom in a little bit to see the current price action in cable and in the FTSE, is this inverse correlation. You remember how only a few months ago we were reading every day in the newspapers about FTSE record high, FTSE record high. That was as the pound was obviously coming under quite immense pressure. Don't forget, at the lows, the pound was trading down at 120. That's a good 10 points off where we are at the moment. That was at the point when the FTSE was kind of really up there punching all-time high levels. Now what you're seeing is the stronger this pound gets, the lower the FTSE goes. And it's a fairly tight correlation at the moment. So I would keep an eye on that if you are looking not just at the pound, but also at the FTSE. If you're looking at the stock index. Just looking at this FTSE CFD where we are at the moment, just trending a little lower. Looks like we're just coming down to that initial opening kind of high from the week's trade on the downside, coming into sight 72.08 with the S2 down at 72.04. Okay, looking back at some other news stories then. Let's have a look at what the press are focusing on for the morning, and you're going to get a lot of this guy this weekend, and it's his 100 days in office kind of marker. It's a kind of symbolic more than anything else, and I'm sure that once this weekend passes, not only will the press start to kind of lose a bit of interest, at least because it's been such a dominating theme the last couple of days, but it almost feels like, because it's coming up to such a symbolic timeline or deadline, it feels like Trump feels like he wants to make a point, and he's really stretching a little bit. He keeps talking and he keeps flip-flopping his direction on a lot of policies, and I think a lot of this is in his pursuit to try and emphasize that what he's doing in terms of what he's achieved over the months gone by. This was probably the biggest headline that came out from overnight, and although the market has not really been too fazed by this at the moment, it is certainly something that, if not managed correctly, could get particularly destabilizing in terms of the geopolitical situation, and then relationships in particular, not with North Korea but with China, because the US obviously has reversed course on calling China a currency manipulator in order to kind of ease tension on those trade talks to be more favorable with China, to prompt them to then deal with the situation in the Korean Peninsula, because China is probably best placed to do that in a more peaceful manner, one would think. What Trump said then, in typical Trump-esque style, he does like the repetition of words. He said that major conflict with North Korea possible, but seeks diplomacy. Make of that what you will, but this coming, of course, after North Korea, I think it was on Tuesday, they held their largest ever military drill in the 85th anniversary of their military. They said their nuclear tests are growing proportionately larger with each individual test that happens. So the tension might well rise depending on what happens. For me, this is a complete PR job by Donald Trump going into this weekend for the reasons just discussed. I don't think this really is a game changer, but certainly is something to watch if it does escalate. Obviously, those ballistic armed missile launching submarines from the US are now stationed in South Korea. So these aren't just purely idle threats. I just wonder whether Trump really realizes the gravity of what he's saying, because this isn't a TV show anymore. This is real life. He did say, even himself, the best quote that I saw, not to give Donald too much of a hard time, but he said that, "I thought running the country would be easy, and my job previously was much harder, but I was wrong." Anyhow, so looking at what else Trump has said, this is one of the other headlines you're probably reading about. So President Donald Trump downplayed the severity of a potential government shutdown yesterday. Obviously, they come to a deadline at the end of today, or on Saturday actually, for Congress to reach a spending deal to avert a temporary layoff of federal workers. Now, for those who aren't aware, the last government shutdown was in 2013, and it lasted for approximately 16 days. But most importantly, although this does affect federal workers, so it's definitely not a good situation from a public perspective, and their kind of how happy they are with the current administration and the ongoings on Capitol Hill. This will obviously add to disgruntlement from a general populist point of view. But from a market point of view, the last government shutdown had pretty much no impact on the market. If anything, equities continued to rally over that period of a shutdown that lasted some 16 days. So it's not so much of a big deal, and you would probably imagine that a lot of this is to do, again, with politics, not anything else. House Democrats have threatened not to vote on the continuing resolution if the Republicans try to bring a revised healthcare bill up for consideration. So it's kind of like a bit of a standoff between the parties, and they're using the threat of government shutting down as the kind of cliff edge, if you like. No doubt, even if we go into a period of a shutdown, it will get resolved eventually. It always does. So I'm not looking at that being too much of a risk. And finally, with Trump, because it's all Trump, it's a Trump Friday, he warned last night the US could still terminate NAFTA if it did not get a fair deal. He said that just hours after he said, we're not going to threat to leave NAFTA. So it took him something like the best part of about 3 or 4 hours before he changed his mind for the third time. Originally, sources were suggestive that the administration wants to withdraw from NAFTA. He came out on Wednesday night and said, no, that's incorrect. We want to talk. I like the leaders of Canada and Mexico. We want to talk, and we will do it and find a compromise. Now he's saying, we will terminate it if we don't get a fair deal. So the one thing you would say, and we were talking about this with a couple of the traders yesterday, is about how to interpret now Donald Trump. I think that the market is getting to a point where Trump's going to soon start losing his ability to be able to communicate and move this market. If you look back to the equity markets to a couple of months ago, you were seeing some really big moves in the market on the back of Trump comments. Let me just bring up the S&P. Let me just clear this up. So one of the biggest moves, and when we actually touched record high territory in the S&P, came right here. 1st of March. Everyone remember the 1st of March? Donald Trump tweets for the first time, I'm going to announce in capital letters a phenomenal tax deal. Market loved it. All-time highs Dow, all-time highs S&P, and we saw just this week all-time highs in the NASDAQ composite. The only problem is that the more he seems to talk now, and given the fact that how this tends to be playing out, and in reality this tax reform deal is not going to happen for several more months, at a minimum, is that the market seems to be desensitizing to what it is that he says. So, you know, I think you've got to put it in a bit of context as well in the case of, unlike other politicians, well, actually, I think, stand corrected, Theresa May likes to change her mind as well, I'm reminded. And so, global politics now is definitely changes week to week. And with that, I think that you can't, if you're a longer term investor, very difficult to really plan and forecast the future when the political scene is changing so rapidly from very short periods of time. And so don't take anything you hear from any politician as concrete would be my strong advice. And especially some of these heads of state such as Trump is probably the most in particular. But then obviously we'll be watching this EU Brexit negotiation period as well when we get into the month of May. Anyhow, that's enough on politics. Let's move on and look at the calendar for today. And so, very busy calendar actually, but let's identify what it is that's actually important and could be something worthwhile from a trading perspective. If we scan through the morning, we have to go really to 9:30 in the UK. You get the first quarter preliminary GDP figure. That's probably the highlight of the morning. So for sterling traders, particularly with cables sitting up at around this R1 level, having breached the kind of top end of the weekly range, I'd be definitely keeping an eye on that. First glance we'll get on UK GDP for the first quarter. Now, previously we finished the year at 0.7%. So what's the expectation today on the calendar? Let's have a look. 0.4%. So we're looking at a slowing in growth, which is understandable, I guess, from the economic data that we've seen out of the UK of late. Looking elsewhere, the other highlights for this afternoon include Chicago PMI. This is that data point, don't forget, that gets issued to subscribers a few minutes ahead of the embargoed release. So I would recommend clearing positions at least 3 minutes if you are in any trade at the time ahead of this data release. The market tends to move about 2.5 minutes before the actual release time, and you often get a buy the rumor, sell the fact type reaction and confirmation, because the rumor that circulates is always accurate. It's more of a leak than it is a rumor in that respect. Other numbers, US GDP. This is also going to be very interesting to see how much has the US slowed going into the beginning of this year. The previous reading of 2.1. And then to wrap things up, you've got the final reading, which kind of takes some of the emphasis off of the report, but the final reading of University of Michigan sentiment. So that kind of wraps up your calendar. Ellen, can you come and at least say hello on the camera, please? As an absolute minimum, given that you have not delivered this briefing. Ellen?
Yes.
Can you say hello to the people? I mean, you are democratically the person that people voted for.
Thank you.
Okay. She's not normally this shy. Okay, guys. Enjoy the session ahead. We'll wrap the briefing there. Have a fantastic weekend. Obviously, bank holiday Monday, so hope you've got some good plans. And I'll be writing the strategy, which I'll issue later on today. Okay, have a good day.